Hello everyone, it is Evan from the Trade Risk here on Wednesday, December 16th with a market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, leading sectors, individual names, and then we get some trade ideas to look at for the rest of this week. So the big news today is the Fed raises interest rates and markets rally. So let's take a look at what's going on here. We started the week off at the lower end of this range, and we were looking for the prior pivot low from November and then some of the support that we saw in October to hold this market more or less where we closed on Friday. We were pretty oversold on Friday. Anything further, we were getting really stretched out here, and you can see the market reacted and behaved technically just as we would like to see. We saw a classic overshoot of, this previous pivot, headed down to, just touched the 200 down here in the SPY. 199.95 was the low print, and then of course we saw the buyers step in, closed on the highs of the day, and that paved the way for a series of gap ups. A gap up yesterday, and we held it, and then a gap up today. A little bit soft. We filled it right away in the morning, and then catalyst was the Fed out in the afternoon, which ended up driving us higher, closing near the highs of the day. So the technical picture here looking pretty constructive and well put together here. I think we have very clear ranges to work against. The lows from this week at 200, certainly your line in the sand if you're bullish. Really, I'd say the 202 level, you can almost cheat it up and tighten up risk a little bit, the bottom end of the range. And then up here at 210 is the prior highs from earlier in December, and then back in October up here right around 211. That's sort of the landscape in. So we're in this trading range. We're heading to the top end of this range, and we certainly have some momentum on our side, and that's demonstrated mostly by these gap ups. Strong participation on both today and yesterday as far as advancing decline and the McClellan certainly working off those oversold levels and then catching back up to not quite at the zero line yet, but getting back up there. As far as some of these fast-moving averages, you can see we're starting to curl higher, which is constructive, and we've quickly repaired a lot of the technical damage from last week. So again, very constructive. Again, I think you still need to be aware that perhaps if you're getting long today, your risk here, your potential reward, you'd expect maybe some resistance in here in this 209, 210 level. So maybe not playing for you don't have a ton of upside there before you really get challenged again by more overhead supply. And of course, we could easily just break through this level and sort of just march our way higher for the rest of the year. But that's sort of the big picture here. I think you have to be a little constructive here for sure, just given the way these past 2 days were. We'll have to see if we can hold into these gains and again march higher to the top end of this range that we're in. And really, the next big hurdle is above 210. I think technically, if we look at a weekly chart, nothing's changed this week. It's a nice rally. It's recovering some deeply oversold levels, but now the bulls really have to prove themselves if we are going to take this market higher above 210. That's definitely where the real technical change comes into play. So that's sort of the take there on the SPY. The IWM again continues to lag here. It's below this band of resistance, which held in here as resistance through September and basically all of October. We had the brief breakout above it and then a quick rejection back below it. So we're just chopping around in a messy range. We need to get back above 116 or so, and then these highs from a few weeks ago at 119 are going to be above us. You can see this market, if you go back to a weekly chart, very comfortable just consolidating sideways here. Perhaps this is a big topping pattern. Perhaps it's a continuation pattern. We don't know yet. But right now it just looks like while today was a nice rally, still tough to get behind this being really constructive just yet. I just don't see it just now. The Qs, much more constructive. The placement of this range is near at 52-week multi-year highs, and that is much more constructive. So again, similar to the SPY, you can see we're racing back, tested the bottom end of this range, racing back to the top end of it now. Again, we have resistance here that we should expect to be resistance anyhow at 115. That is where the market failed previously. Need to get back above those levels to see a new surge of momentum here, new leg higher in the Qs into year end. So that's sort of the stance there on the market. If we look at some other markets, TLT closed mildly red today. Not so exciting given everything, given the news today. Not a whole lot of volatility as maybe some would expect. Granted, this is the long end here. The Fed raising short-term interest rates. This is a 30-year bond you're looking at, or the long-term 20-year plus. So, it doesn't have as direct of an impact. But again, I'm not an economist. I'm just a trader, so I'm looking at price. Really nothing to do here, very boring. There's so many other markets that look more constructive than this. So again, just not too interesting, sitting in the dead center of its range. If we look at some of the metals, gold had a little bit of a rally today, up 1%. Again, nothing really changed from the bigger technical picture. I think we're going to get back above 104. Again, this was support from back in August. Maybe this turns into a failed breakout. That's what we've been potentially looking at, but so far we haven't seen that happen. Silver, similar situation, 3% rally. It's nice, but we really need to get back above here, start taking out some resistance, and then that would get us a little more constructive. If we look at oil, this got killed today, down 3.6%. Downtrends, they're still very firmly intact, and again, like we said in last week's video, no reason to try and bottom pick this just yet. You're getting no signs of it. Really, you should be trend following this lower if that's your style. Right now, I just don't see too much reason to want to try and bottom pick that. UNG, very similar situation. It managed to close green today. A little bit of a different camp. It is slightly more or severely oversold. Could use a bounce, rest, pause in the downtrend, but again, still nothing that is too interesting in trying to fight or bottom pick. So just an avoid for me. Now, if we look at some of the leading sectors today, XLP, the staples. We've been talking about these guys for a little bit. Nice rally. We talked about it before. This was last week as it was challenging and breaking back below this $50 level. You can see how quickly we reversed and we broke to new all-time highs here in the staples. Very constructive. This is a group you want to focus on if you are interested in playing on the long side. I know it can be a boring sector, but 2% certainly a nice day. Nothing boring about that. Healthcare, very nice day as well. 1.3% to the upside, and you can see here it's starting to break above 72.20, where it's found resistance now for the past several weeks to the couple of months. So looking good there. Nice little fresh breakout today. I like it. Another sector that you should be focusing on. And then, of course, the rate-sensitive sectors, XLU catching a nice bid today, 2.5%. This one in a larger range here between $45 and call it $41. But potentially you can get a trade back to the top end of this range in the coming weeks if this move continues. And similar with the IYR real estate sector, again, very closely tied to rates here, and you can see these are catching a bid, moving higher. Got to get back above $76 or so in the IYR to look more constructive. Now, if we look at some individual names, Apple here, looking real weak and vulnerable earlier in the day. We did see some type of reversal. I just don't like Apple here. Technically there's just so many better setups out there. This looks like a potential topping pattern here. It just doesn't look that ideal. It's hanging on here. This 110 level or so looks like a nice short below today's lows going forward. Google, this is a nice looking chart. We're at near all-time highs. It's been consolidating, had a nice little pullback. This one is something you want to keep on your radar. It doesn't seem a whole lot actionable just yet, but I do like it. Amazon, very similar situation, watching these highs here, very close to all-time highs. Spent some time digesting. Maybe this one catches up a little bit. Facebook, very similar. I like this one the most, just given the consolidation pattern here at highs. I would be interested in getting long this name with a little bit more energy, maybe above 107.50 or so, 108. I'd love to see it go sideways here. Just nice inside day tomorrow, and then maybe a fresh breakout on Monday or something. That would be an ideal situation for me. I like Facebook though. Twitter, this one had this very promising day here, back on Thursday of last week, up 7%, breaking back above $25, and unfortunately it's just rolled back over. It is holding, it's just fighting to hang on to this 23 3/4 level. So far it has been, but again, the alignment of some of these fast moving averages just not ideal for the long side. Really want to get this back above $25 to see a little bit more constructive action in Twitter. GoPro, this one is starting to look a little more constructive. It's also had some sharp up days, green days as well. 11% rally back on Thursday, holding those gains, and then it had the real big 10% drop off. But we did recover that 10% drop off pretty quick, so that is sort of constructive there. You can kind of see, you get the impression that the selling pressure is drying up a little bit down here in GoPro. Maybe there's some value in this, but it's trying to at least catch its breath, move sideways, and maybe maybe we're in for a little bit of a rally here in GoPro. Finally, Tesla looking a lot more constructive here. 6% day, very sharp day in Tesla. It's trying to put in good lows here above this 210 level, and it's got this little base that it's working out of. So looking constructive in Tesla. Bigger picture is a little a little uninspiring, just where it is positioned in the bigger time frame. So probably not going to touch it on my side, but nevertheless, it does look pretty good. Finally, Alibaba. This one's shaping up pretty well, getting some very clear defined resistance right above $85, right around $85. Keep that on watch. Strong bounce recently. That one could move further. Now, if we get into some individual, more actionable names, SJM, this is the first one, and we got a cool, I don't know why my rectangle is shaded in red there. SJM looking pretty good. At highs, had a bit of a bounce here, a strong bounce recently. But it's challenging these highs right here. This is something I'm actually involved in. We got involved in this today, looking for more upside here. Near all-time highs in SJM. I like it, so look for that one to move forward. OC. Here's another one, Owens Corning, that I think we've charted in the past. This one's looking pretty good again, closing at new all-time highs as well. New all-time highs as well, above $48. Not quite at the highs of the day, but it is hanging up here. Let's see if it can see some continuation. No position for me. GE, interesting. I don't know why these getting the red border on this, but I guess it gives it a little style. GE getting going again. This one's been a monster, especially for its industry and essentially what it represents. But General Electric, 2% update today, didn't quite close on the highs, still looking pretty good though. It's holding pent up, exactly what you want to see, so that one looks good. MDT, this one goes back quite a bit. Look at this, very clear defined resistance levels all the way back to the beginning of this year. $78 are the all-time highs for Medtronic. You can see this is the long-term chart, monthly chart of it, very long-term uptrend that it's been in. It's been consolidating nicely. Let's see if this one can continue a bit. And then finally, PTLA. This one here, biotech name, looking good. Strong surge today, 7.8%. But look at this nice consolidation that it's been in for a few months now. Weekly chart shows the picture pretty well. I really like this name, especially with this weekly candle that it's putting in right now. So keep an eye on how this closes the week. Something I'm looking at very closely. And that's it. That's what I have for today. As always, if you like the videos, do subscribe to the YouTube channel. Traderist.com/join on the mailing list. Get more of my trade ideas on the weekend. And as always, thanks for watching. I will catch you next time.